second. Okay, so in the last classes, we did a lot of practice of double entry as well, and I hope you also did that homework question. Will you able to do that? Was there any problem
Yes, it
in that
was
question?
fine.
One second,
Yes,
give
I
me 1 second.
am
Okay.
done.
Okay, so was that question easy to do? Did you do that question?
Yeah, it was fine.
Okay,
Yeah.
okay, right. So you can also share me the solution after the class, and I'll make sure to check it. And after that, we'll start the next topic. Okay. So in this class, we're starting the next topic. Obviously, we have done a lot of
Okay, so
practice of the.
sorry, do I need to take a picture of my exercise and I will send it to you?
Yeah, exactly. Wherever you did it on the paper
Okay.
or anywhere, you can send it after the class. Then I'll check it, and then I'll
Okay.
let you know if you did that correct or not. Okay. All right.
Okay, thank you.
So we are starting the next chapter today. We did a couple of questions of double entry. So I think it's enough for now, but we will practice more questions as well in the upcoming classes as well. Okay. So we are starting the new chapter, and the chapter name is over here. As you can see, this one, chapter number 5. So we have done till chapter 4.
Okay.
I have taught you how to balance the T accounts. I have taught you how to, do the double entry, right? Now we are starting a new chapter. This is known as return, discounts, and sales tax. So there are three simple things. They're not difficult at all. We'll be able to understand them easily. Okay. Now,
Mhm.
1 second. So returns, discounts, and sales tax. Okay, so first I'll be looking into the returns, then I'll discuss the discounts, and at the end I'll come towards the sales tax. And after that, we'll probably be doing the exam kit questions of it as well in today's class. Okay, now first
Okay.
of all, let's look at returns. It's a very easy to understand chapter, right? The reason I'm
Mhm.
not going to the book, the reason I'm not going to the study text is that, again, I want to explain all the topics in the most easiest format as possible. If we go onto the study text, it's very confusing to understand. So it's very simple to explain over here and understand over here. Okay. And again, if there is any theoretical topic, we'll be studying it from the study text as well. Okay. Now returns have basically over here, returns are basically meaning the sales return and the purchase return. Okay. But first of all, we need to see what are the double entry for sales, right? And for purchases as well. Because if we understand the double entries for these two, then we'll be able to differentiate between the returns and the normal entries. So for sales, yesterday and in the last class as well, I told you that the entries like this, we credit sales, right? And we debit either receivable or we debit cash, depending if the transaction is on credit or cash. Okay, so basically if it is on credit, we create a asset known as receivable, right? And that shows us that we have to actually receive cash from our customers. We have actually not received it yet. And secondly, if it is on cash, we receive the cash. So that means, again, cash is an asset, it's increasing, so it's debited. And credit, we do sales, because sales was a group 2 item. That's why sales is always credited when it's increased. Okay, now looking onto the purchases, purchases was a group 1 item, right? That's why it is debit for increase. So we do debit purchases. And on credit, similarly, either we do credit payables if it is a credit purchase, or either we do credit cash if it belongs to the cash. Okay, so this was the entry for sales and purchases. Obviously, we are crediting payables because it's a liability, and liability was a group 2 item. That's why liability is increased for credit and decrease for debit, right? And purchase was a group 1 item. So these are the normal entries that we discussed yesterday as well. Now let's talk about the returns. What happens when we return? So sales return, and then we have purchase return. Okay. So let's first look at sales return. Obviously, the return entry would be, this is a very simple thing. It's a common sense that return entry, return double entry would be the opposite to the normal entry, right? So if sales entry is like this, we would just reverse this. We would just swap this. So we'll arrive onto the return entry, right? And this will be done as, you see over here, sales we are doing as credit, right? But if we are returning, if we are getting the returns from the customers, that means the sales return, what we'll do is we will not debit sales, but we will debit sales return. Okay, there's a separate account for the returns, so we'll debit the sales return. Okay, because it's the opposite happening over here, we're getting the goods back. Okay, on the credit side, what we'll do is again similarly reduce the receivable or simply refund the cash to the customer. And for refunding, obviously our cash is going out, right? So if asset is decreasing, cash will be credited. And if we are reducing the receivable, obviously the asset is also going down, so it's credit on this side. Okay, so this is the entry for the sales return. Now let's look at the purchase return as well. Over here you see that purchases are normally debited, but for the return, what we do is we credit the purchase return. Okay, so purchase return is credit. And on debit, similarly, either we decrease the payables because liability is decreased on debit side, or either we get our cash back because it's purchasing, right? We are the customer over here, we're not the supplier right now. So we're purchasing. If we return those items, that is purchase return, we get the cash back simply, right? We get the refund, so that is debit cash. Okay, so these are the entries. I hope you're clear. Again, we'll be applying these onto the questions as well, and these will be further clear over there. Okay, now there are two more things, two more elements that I'm going to discuss right now. These are also part of the returns topic. Okay, first one is known as debit note, and second one that I discuss over here is known as credit note. So these two basically are documents, right, for returns. So what happens is, let me explain for you from the start. So what happens in the debit note is that all the story starts from the customer, right? The customer initiates the return, right? Because obviously supplier will not say that, okay, please give me the return back. The customer initiates it because he finds something bad, a fault or the wrong color, the wrong size, right? So what happens is that customer initiates the return by writing a debit note. Okay, so if I write the definition of debit note, this will be initiated by customer and given to supplier. Okay, initiated by customer and given to supplier for, or we can call it, one second, as a request for returning the goods. Okay, so this is the definition for debit note, that again it's started by the customer, it's initiated by the customer because customer finds the fault or anything which is wrong in the item and he decides to return the item. Okay, so this debit note is sent to the supplier. It can be sent by any means, by email, by post, anything, and it is basically the request for returning goods. It's asking the supplier as a request that please accept my return as you have sent me the wrong items. Okay, so this is debit note. Let me write in the short form as well. Customer gives to the supplier. Now let's talk about the credit note. Credit note is very easy to understand. It is simply the response from the supplier to the customer, okay, for the return. So the response from supplier to customer accepting the return, accepting or not accepting. It can be both things, right? It depends on the circumstances. So accepting or not accepting the returns from customer. Okay, so this is the correct treatment. Again, I'm repeating, debit note was when customer initiated the return, right? He gave a document, he raised a document to the supplier requesting him that please accept my returns. Okay, and credit note is the reply from the supplier to customer that, okay, I've accepted your return, or please send the goods back, the ones that are wrong. I'll refund you the amount or I'll decrease your payable. Okay, and I'll adjust it afterwards in the future. Okay, so these are both things, debit note and credit note. Mostly they come in exam as well. Sometimes the examiner can ask you in the MCQs. So these are debit note and credit note. All right, clear? Any confusions?
Yes, clear.
Okay,
No.
great. Now let's move on to the discounts part, because returns is completed. There was nothing much in the returns. Now let's discuss the discounts. Okay, just give me a second, 1 second. All right. So discounts basically is very interesting topic as well. We'll be getting to see very interesting things over here as well. So discounts, I would first like to tell you that there are two types of discounts. Okay. First is known as trade discount. So trade discount is very easy to understand, right? And the second type I'll write over here. This is known as settlement discount. Okay. So trade discount is very simple. What we do is that this is basically given when bulk purchasing is done, right? You might have seen some suppliers, like if the customers purchase from them like 10,000 units, 100,000 units, a lot of units like 500,000 units, 50,000, right? A lot of bulk purchasing happens, then this trade discount is given. Okay, because as the name suggests us that this is trade discount. So trade means that you're purchasing a lot, the transaction is being done a lot, right? So that's why trade discount is given. Okay, this is because of bulk purchasing. This is the reason for this. Okay, now what we do is I'm going to explain you 2 or 3 short words, short terminologies that will be used in this discount as well, and in the next topic as well, sales tax as well. Okay, so what happens is that first there is an amount known as gross amount, right? And this is basically equal to basically the net amount plus the discount. Sorry, I wrote it the opposite way. 1 second. It's gross. So if we minus discount from the gross, we arrive at the net amount. Okay, this is very easy to understand as well. So gross, as you know, gross word is coming from uh, any amount which is adding up all the things, right? Which is an accumulation of all the amounts. Nothing is deducted from this as yet, right? So gross is known as that amount. If we minus the discount from that, it becomes the net amount. So net basically means any amount with any kind of adjustment, right? So net is basically meaning amount that has adjustment reflected in it. Okay, and gross is basically the normal amount. For example, let me give you an example. Like if we go to the store, we see a price tag on anything and it says 1000. Okay, so this will be called a gross amount because this is the normal price that everyone is willing to pay, right? But then we see a banner or a poster outside the store. It says that we're giving 50% off, 50% discount, right? So that means how much will be 50% of 1000? I think it will be 500, right? So that means we are saving 500, we're getting 500 as a discount. So that means what will be a net amount? It will be 500, right? Net basically means that how much we have to pay. All right. So what happens is that in trade discount, this is a very important thing. In trade discount, no double entries, no double entry for discount. Okay, so there is no double entry created for the discount, but yes, in the settlement discount, yes, there is a double entry. I'll give you some examples as well so that you'll understand. Okay, again, a store had a price of 1000. It was giving 50% discount on its all products, right? So when we calculated this price, the net amount came as $500. Okay, so what entry do we have to make? Again, we are purchasing, right? Over here we are purchasing. So debit we do purchase, and credit we do cash because we're paying with cash, for example. Okay, so what we do is we just write it as straight away as $500. We don't include as a separate entry for this discount. We never make a discount double entry in the trade discount. Okay, so one more thing I'm writing over here: always make entry with net amount. Okay, so this is the definition for trade discount. Again, I'm repeating, it's basically arising from bulk purchasing. If you purchase in bulk, right? And discount does not have any entry. Yes, we do an entry for purchase, normal purchase, like we did in the last class, right? But there is no double entry specifically for discount. Okay, and always remember that if it's a trade discount, we do the net amount entry directly. We enter it with net amount, because obviously there is no discount involved, right? So we look at directly at this final price, which is after the discount. Okay, let me write over here, after discount price. Okay, so this was the definition for trade discount. I hope you're clear to some extent.
Yeah.
Further, we'll do the practice for this as well, and you'll be further clear on this as well. Okay, so this was easy to understand, but the thing is that settlement discount has some technicalities as well that we need to understand. Okay, now settlement discount has further two things. Okay, there were two types of discount, trade and settlement, and in settlement there are two subtopics as well. First is known as discount allowed, discount allowed, right? And the second one is known as discount received. Okay, we're going to discuss them each and every one separately. So as you know from discount allowed, let me give you an introduction. Like discount allowed, what does it mean? We are giving discount to somebody, right? Allowed basically means we are giving it to somebody, right? So this means that discount allowed will be treated as when we are selling the goods. Okay, when we're doing a sale. Okay, and discount allowed will be treated as an expense. Okay, always remember, because discount allowed basically means, for example, if I am a supplier, okay, or just let's take a small example. If I am a teacher, okay, I am providing one course for example, £100, right? And I give a discount to the student, and I give him the course at, for example, just like you can say £40, okay, after the discount. So this is the net price, right, after discount, right? So what happens is that I'm losing £60, right? I was able to give him for £100, but I'm giving him the discount of £60. So that means £60 is my expense, right? And allowed will only be recorded when there is a sale. Okay, now I'm coming towards the discount received. Discount received is when you're purchasing, because obviously this is uh, affiliated with the word. Allowed obviously means when you're selling something, right, to the customer, you're giving the goods. And received means when we go to the store as a customer, so we are purchasing something, right? Now discount received will be treated, always remember, it will be treated as an income, because we're getting some kind of relief, right? Now understand it as, it's the same example. Now understand it at the student side. Okay, so student is very happy, I gave him £60 discount, as in I gave him 60% discount, and I gave him the course for £40, for example. Okay, so that means the £60 will be treated as his income, right, over here. So that's why it's kind of a relief. It's, he's paying less right now, right? So this will be treated as other income in the statement of profit or loss.
Okay.
Okay, so this is the settlement discount. This was the basic summary. Remember one thing, that this settlement discount, like I wrote over here, trade discount was for bulk purchasing. Settlement discount is discount when cash is settled. Okay, that's why it is named as settlement discount, because it means that whenever cash will be settled, this discount will be given over there. Okay, so that's why it is known as settlement discount. And the second thing over here is that always make double entry for discount. So this is the most important rule over here, that always we have to make a double entry for discount. Okay, we don't have to forget this in every question. Over in the trade discount above, I explained you there was no double entry for discount, but in this, yes, there is a double entry for discount as well. Okay, now let me explain you with examples of both trade, for the discount allowed as well and discount received as well. First, let's discuss the discount allowed double entry. Now, I told you that the discount is given when the payment is settled, not when the goods are delivered, right? Yesterday, I explained you that there are two stages. If the transaction is happening on credit, there are two stages, right? First, the goods are delivered. For example, we create the entry debit receivable credit sales, right? And then after 15 to 20 days, we have to pay, right? So that payment stage, on that payment stage, we will do that settlement discount entry. Because always remember that settlement discount will have some kinds of conditions or covenants attached to it. Okay, like let me give you an example. Some institutes you might have heard, They give early bird discount as well, right? Like if they pay, if they say that if you pay within 7 days, we'll offer you 10% discount, right? So this is the condition, right? If we pay at the 8th day, that means we'll not get the discount, right? So this is one element of the settlement discount. This is basically, you can say, uh, this is one way to understand the settlement discount. There's a
Yeah.
condition attached. Okay, there can be many days, like if you pay within 20 days, 25 days, right? So there is always a condition attached with the settlement discount. Okay, so that's why the discount entry is done at the time of payment. Let me write over here as well, at the time of payment. This is the reason it's called as settlement discount. Okay, now let's discuss the double entry for discount allowed. Again, we have to remember that the discount entry will be made at the payment date. Okay, allowed, discount allowed, I just told you, this is considered as sale, right? When we are selling something. So normal entry, what we do is that we make the entry as debit receivable, right? And credit sale, just like normal. Right now, the goods are just delivered. Okay, now after 10 to 15 days, now is the cash payment stage. Cash payment is done.
Yeah.
Okay, so what happens is now the double entry over here is very important. Suppose we got the discount, we are eligible for the discount. So how the entry will be made? Let's see this. First of all, we have to cancel out the receivable, right? So we do credit receivable. We finish this receivable, right? So in return, what we get is cash, right? We are receiving cash. So debit, we do cash. Now, why I left this line in between is to make this discounting entry, because this is a settlement discount, right? So discount allowed, I just told you above over here, you can see it is treated as an expense, and expense is always debit when it's increase, right? Remember? So that's why we'll do debit discount allowed. Why I did debit? Because it's an expense. It's a loss for the company who's selling, right? So this will be the complete entry. And always remember, this discount allowed entry will be made at the cash payment stage, not before that. We cannot make this entry on this stage. Okay, we have to make it on this stage. All right, got it clear? Now, just
Yeah.
a small thing that is adding to this topic. It's basically a top up thing. This will help you in the exam as well. What we do is that I explained you three words above, right? One was this gross, one was discount, and one was net, right? So
Yes.
always remember that on receivable, we'll write it as gross amount, right? Gross amount. One
Yeah.
second. Let me just give me a second. Okay. So basically what happened is that I told you these three words, right? Over here, gross, discount, and net. Now I'm connecting these three words to this example that I told you about over here. Okay. Now what we do in cash is we have to think over here logically. It's very easy to understand. Now, when we made the sale to the customer on this point, where I've made this dot, right? When we made the sale to the customer, we did not know that the customer will pay. For example, the condition was this one. If he will be able to pay within 7 days or not, right? He might be able to pay within 10 days, right? So if he made the payment after 7 days, obviously discount will not be given, right? When we actually
Right.
receive the cash, at that point we actually known that he's eligible for the discount or not, right? Correct. Now what happens is that we create a receivable with the gross amount itself, the whole amount. There was no cutting in this amount. Okay, and we record the sale with the same amount as well, right? So what happens is that when we finish this amount, when we are making the counter entry for this discount, what we do is that on the receivable side we write it as a gross amount. Okay, and because we have to settle the amount with the amount that was actually created, right? So if 1000 was written as a debit receivable, I would finish it with the 1000 as well. It would be the same entry, right? And discount will be written as a discount amount that I explained you above. and cash will be written as a net amount. Okay, so this is the treatment that we're doing. You can see over here, gross, discount, and net. So receivable will always be credited with the gross amount, always remember. Okay, and discount allowed will be written the discount, and cash will receive net, right? Obviously we'll receive 500, not 1000, because we give a 50% discount, right? So that's why cash will always be written as a net amount.
Okay.
Okay, all right, so this is the treatment that we're going over here. Now let's
Mhm.
discuss the discount received as well. That will also be clear over here. Discount received, and then we'll do one or two examples, then hopefully you'll be much clear about this concept. Now for discount received, normally when the goods are sold to the customer, we don't know. Over here we're the customer, right? And we're purchasing from the
Yeah.
supplier. So normally we don't know that when we'll pay. Maybe we'll be late, maybe we'll pay early, we'll get the discount or not, right? We don't know right now. We're just making the normal entry for the credit purchase, right? Debit purchase, and credit we do payable. Now at this point, after 10 to 15 days, we arrive at the cash payment stage over here. Okay, after 10 to 15 days. Now what entry we do? We created a payable, right? On credit, this is a liability. So first we have to finish off this liability. What we'll do is that debit payable, because we are making the payment. So obviously there is no use of continuing the liability. So we'll finish it over here. Okay, debit payable. Now what we do next is we credit the cash, because we are paying the cash, right? We are the customer over here. We are not the supplier anymore. This is discount received,
Yeah.
because this was connected with purchases. Okay, now debit payable credit cash, and the line in between I left is because to enter the discount received entry. So what will be the discount received entry? I just told you above over here. It's treated as an income, right? So income is always
Mhm.
credit for increase. So I'll credit discount received over here. So this is the complete entry, as you can see over here. Again, the same treatment. We created a payable with full amount, right? We wrote 1000 over here and 1000 over here as well, right? So that's why debit payable will be finished with the gross amount as well, because we created it with gross amount. That's why we'll finish it with gross as well. Obviously cash will have to pay net, because we'll pay the after discount cash, right? Not the before discount, because we got the discount. And over here we'll write the discount amount. Okay, so this is the treatment for discount allowed and discount received.
Okay.
All right, I hope you're clear to some extent. We'll do some questions as well, some examples as well, and you'll be clear about that as well in this. Okay, but before the example, let's take a short break of 2-3 minutes, right? And after that we'll
Okay.
start with the example. Okay.
Okay.
Okay, let's resume. Let's do the example, and after that, we'll move on to the sales tax topic. Okay. Now, I'm making a small example over here so that it's very easy to understand. I'll make one for discount allowed and one for discount received. Okay. All right. So first of all, let's write an example over here. So Mr. A sold goods to customer for $1,000. Mr. A would give 20% discount if the customer paid within 1 week. Okay, so this is the example. And as I told you above, that in every settlement discount question, there will be a condition attached. So you can see this is the condition, that if the customer paid within 1 week, he would give 20% discount, right? And below it would be written as the customer paid in 5 days. Okay, so obviously if he paid within 5 days, he would have gotten the discount, right? That's simple, because it's within 1 week.
Yeah.
So that's why it's in 5 days he got the discount, right? Now, what we'll do is that first of all, again, he when he was delivering the goods to the customer, he would make the normal entry, right? He would do debit receivables, right, and credit sales. This is the normal entry when the goods were delivered,
Yes.
and this would be with 1,000 and 1,000. Now let's do the payment entry. He paid within 5 days. After 5 days, the entry that we'll make is, first of all, we'll finish the receivables, right? So credit receivables. In return, we're getting cash, right? So debit will do cash. And because this was discount allowed, right? Because sales are happening, he sold goods. So that's why debit will do discount allowed, because it's an expense, right? That's why it is debited. Again, what will be the amounts written over here? I told you that receivable was made with 1,000. So we'll finish it with 1,000 as well. Same amount will be written. Okay. Now let's calculate the discount as well. 1,000 into 20%. So this is 200, right? So cash that we received is actually 1,000 minus 200, which is 800, right? So the net cash that we received was 800. So debit cash will do as 800, right?
Yeah.
And debit discount allowed. How much was the discount? Here, 200, right? So you can see as well that also that concept that I taught you, duality concept, every debit should have a equal credit. You can see that this is met as well. Total debit is also 1,000 and total credit is also 1,000.
Yeah.
Okay, so this is the correct entry for the discount allowed. Okay, I hope
Okay.
you're clear. Now let's move on to the discount received. I'll make an example for that as well. Just give me a second. Okay, so over here I've made an example for the discount received. This is a bit different example because in this there is the condition is being breached over here. It's being broken over here. Okay, now let's see what we'll do. First of all, what we'll do is that again create the normal entry when we did purchases. For example, we are Mr. X over here. Okay, so debit purchases and credit we do payables over here. We create the normal liability and it will be with the full amount, the gross amount, which is 5,000 and 5,000. Okay, now after 22 days, now You tell me that he was eligible for the discount of 50% if he paid within 20 days, right? Now, how much actually Mr. X took to pay? 22 days. So did he get the discount or was he not eligible for the discount? He was not, right? Because he
Was
paid,
not, yeah.
exactly, he
Because
was
he
late.
pays in 22. Yeah.
Exactly. He paid 2 days late. He was 2 days late. So that
Yeah.
means there was no discount involved over here. So simply the entry what we'll do is credit, sorry, debit will do payable. We'll finish the payables with 5,000 simply, and we'll pay the cash. We are Mr. X, so we'll pay the cash with 5,000. There will be no discounting entry over here because he did not get the discount. Okay, so at the end of the day, it all depends that if he was eligible for the discount or not, and it all depends on the condition, if it is breached or if it is met.
Okay.
Okay, so this for discount received and discount allowed. Two examples we have done. Okay, and discount chapter has also ended over here, the discount topic. Okay, I hope you're clear
Okay.
about this as well. I'll send you the notes as well. Now let's move on to the last topic, which is the sales tax, because there were three things, right, in this. So the last one that we're discussing is sales tax. Okay, this is also a very technical area, and sometimes it's also asked in the exam. 5 to 10 MCQs can be asked. So, and this is actually a very scoring area because this is a calculation based, so it's a very scoring area. Student can easily score in this. Now, there are two types of taxes. What happens is, first is known as input tax, and second is known as output tax. So let me give you a brief introduction as well. So the topic that we're studying is sales tax. Obviously, the tax we pay on the sales, right? So this is basically the F3 topic is designed as a UK syllabus, right? So you might know these two things as well. That one, there is an input tax. Second, there is an output tax. Okay. So what happens is that in input tax, always remember this is connected with the purchases. Okay, and output tax is always connected with the sales. So what actually happens is that if I talk about the output tax, output word is basically meaning that we are paying cash outwards, right? Something is going outwards, output, right? So if we are selling something, right, so we have to pay the tax on that from the customer to the government, right?
Okay.
So what happens is that input tax, first let me explain the input tax. So input tax, what happens is we purchase goods and obviously we pay sales tax on it. That is included in the price, right? We purchase goods, we pay sales tax. And if we are registered from the tax department, then what happens is we get a refund for that. Okay, so input tax, always remember the tax that we pay on purchases, right? And if we are registered with the tax department, which is the HMRC, then we get the refund of that, right? This is known as input tax, but the refund condition is only for those who are registered. The people who are not registered, like a small 10-year-old or 15-year-old, right? Obviously he would not be able to refund the tax, right? So this is their definition for input tax. Input, again, the word input came from something is cash is coming back to us, right? So input means that we'll get the refund at a point in time in the future. We're getting the cash back. Okay, now output tax is the tax paid on sales on behalf of the customer, on behalf of the customer to the tax department. Okay, so this is the correct definition for this. That what happens is that, for example, if we are selling a product A to the customer and it costs £1,000, right? And we also tell the customer that this amount is without the tax. You will be subject to, for example, like 20% tax, right? So what is 20% for this? £200, right? So that means the total that the customer will have to pay is £1,200, right? The product price plus the tax, right? So this means this $1,000 belongs to us, our company, right? But this 200 does not belong to us. This is collected from the customer on behalf of the government, right? And this $200 is given to the government. In other words, to the tax department. Okay, so this $200 we are collecting from the customer on behalf of the tax department, and at the end of the month, or at the end of 6 months, or at the end of the year, we have to give all the taxes accumulated, we have to pay it to the government. Okay, so this
Okay.
is the output tax. Always remember, this is connected with sales, and input tax is connected with the purchases. Okay, so this is the relation between input and output tax. Now let me make the sales tax account as well over here, because there is a T account as well for this. So this is the sales tax account. Okay, now input tax, always remember, it's written on the debit side. One second. Input tax is always written on the debit side, and output tax is always written on the credit side. Okay, because what happens is that normally this sales tax is treated as a liability. You might know this as well, right? Like all the companies, they pay their sales tax in a total form after 1 year, right? So for those 1 year, it is kind of a current liability, right? So liability, you remember, the credit side was a plus for this, and debit side was a minus. We add it on the credit side, and we decrease it on the debit side, right? So input tax basically means that at the end of the day, we'll get it back, right? So it's decreasing the sales tax liability. And output tax means we are selling, so the government is expecting more from us, we'll pay them more, right? So it's basically, in other words, it's increasing the liability. Okay, so that's why output tax is written on credit and input tax on debit. Now there are also opening balances attached with this. Let me tell you what this means. So if it is on this side, on the debit side, it is a receivable. Receivable basically means one thing over here is that whenever we pay the inputs and outputs, we first net them off. Net them off basically means that we minus the input from the outputs, and the net amount that we pay to the government is called the sales tax. Okay, it's not like first we pay the output tax and then we receive the input tax. It's just like output is the payment that we're doing, it is going to be minused, right? And then input is that we're going to receive, so it's going to be added. So for example, we have to pay 1000 to the government and receive from them 200, right? So the net amount that we've got is 800, right? And 800, what we have to do is still to be paid to the government. We still have to pay, because 1000 was more amount, right? And 200 was the only amount that we have to receive. So even after receiving those $200, we still have to pay $800 to the government. So always remember, sales tax is always paid after netting these two off. All right.
Okay. It's like our customers have paid more taxes than we have paid. So it's like that.
Can you ask again? I think your voice was a
So
distorted.
it's like we paid more taxes
Yeah.
than our customers. So we have to pay still £100.
No. Basically, what happens is that output tax is the tax that we're receiving from the customers. We're not paying anything from our pocket. It's just we're receiving from the customers and just paying it ahead on behalf of the government. Okay, and
Okay.
input is the one that we're receiving on the purchases. Okay, that the purchases that we did is the tax that we're receiving as an input tax, that will be refunded to us after 1 year, right? So when we'll go to the tax office, the tax department, they'll first ask, what is your total output tax? What is your total input tax? Was there any opening balances that were due before or receivable before, right? So they'll basically be making this T account, and final balance that will be payable or receivable. Okay, we'll do the questions, then you'll be comfortable with this. Don't worry, it will be a little bit confusing. So what happens is, I'll explaining you that opening balance, if it is a receivable means that from past years we might have received something from the government, right? It was a receivable, we still have to receive that. And receivable is an asset, right? So at asset is written as a debit in the T account because it's a asset, right? And if it is a payable, if we still have to pay, the opening balance is payable. Like for example, for the last year we still had some balance left that we did not pay. So if it is a payable, it is written on the credit side, because payable is a liability and liability is always credit for increase, right? So this is the treatment for this. And obviously if it is a closing balance for payable will be over here, right? And closing balance for receivable will be over here. This is the relation between the opening and closing. They're just written on the opposite side. Okay, this is the relation that I've drawn the arrows over here. And the total is that we calculate the total over here. All right, so this is the sales tax. We'll do some questions as well. Then you'll probably be, comfortable with this concept even more.
Okay.
Okay. Okay, just give me a minute. I'll be back. Just a minute.
Yeah.
Okay, so only two things are left in this topic, in the sales tax, and then this topic will be ended. Now, I'll not give you any homework for today because there are a lot of topics. We studied 3 topics. I'll do the exam kit questions in the next class, in the tomorrow's one, right? And just 2 things are left. After that, we'll just discuss one example, and after that, we'll end the lecture. Okay. So the 2 things that I
Okay.
was telling you, firstly, there are 2 words. Okay. First word is known as inclusive amount, right? And the second word is known as exclusive amount. So let me tell you what is the difference between these two. Okay, so inclusive, as you can understand from the word, this basically means that the amount is basically the amount that we're paying. The tax is already added in this amount. Okay, inclusive means that it's already included, right? So let me
Yeah.
write the definition. The amount which tax is already adjusted in the amount that we are paying. Okay, so this is the inclusive amount. And what about the exclusive amount? Exclusive basically means tax is not added in the amount we have to pay. Now let me explain to you some other words that the examiner uses as well. So for the inclusive amount, it might mostly it will use the inclusive word, but for exclusive, it sometimes uses 2 or 3 words. Okay, first of all, it uses list price. Sometimes it can use this word as well, because list price basically means just the product price. For example, if I'm buying a laptop for 500 pounds, right? So that means this is just the laptop price. I may be able to give 10 or 20% more tax on that. And that thing, the cashier, the counter person will tell me, right? So the list price basically means exclusive amount. Exclusive just basically means just the product price. The tax is not added in this. Okay. Second word for this is plus tax, right? You might have heard in some advertisements as well that this amount is priced at, for example, 499 pounds plus tax, right? So plus tax means the tax is yet to be added. It's not added right now. Okay, so this is the meaning of exclusive amount. Only these 2 words it can use. Basically, it will use the exclusive word, but it might use this price as well and plus tax as well. Okay, now let's do a small example for this, right? And for that, you'll be able to understand it more clearly. Okay, so Mr. A had following transactions. So he had the inputs. These were $50,000. And this is exclusive amount. And he had the outputs of let's say 30,000, and this amount is the inclusive amount. Okay, the tax rate, let's assume it is 20%, and we have to make a sales tax account over here. Okay, now let's see how this question will be done. Okay, it's very simple to do. I'll just make a sales tax account over here. So sales tax, right? Now, what does it mean by inputs? Input basically means, like I just explained you above, input is basically meaning purchases, right? The tax will
Yeah.
get back from the government for the purchases. So input in other words is purchases,
Yeah.
right? And output in other words is sales, right? The tax that we have to pay on sales. Now I told you that output tax is written on credit side, like in the format I told you above, and input tax is written on the debit side, right? Now let's see, there is a little calculation for the inclusive amount, but first let's do the exclusive, then I'll come towards inclusive. Okay, so for exclusive, it's a very simple calculation. Always remember, it's 50,000, right? We just have to apply the tax percentage over here. So these are the sales, see, these are the purchases, right? 50,000 pounds we spend on the purchases, and for the tax we have to just multiply it with the percentage, right? So I think this will give us the amount of 10,000. Okay, so input tax we have successfully got, it's 10,000. Now how do we calculate the output tax? Now listen over here clearly, because inclusive has a very sensitive calculation. Okay, what we'll do is 30,000. Now we don't multiply over here with the tax percentage. What we do is, I just explained you above that this 30,000 is inclusive, right? What does inclusive mean? Inclusive means that this 30,000 already has the tax amount in it. It is already adjusted for the tax amount. So that means this is not 100% amount. This is a 120% amount. Why I said 120? Because it already has the 20% element in it already, right? So what we'll do is, we'll do 20 over 120. Okay, or you can also do like this. In other words, 30,000 divided by 120, and this will give us the answer for 1%, right? It's simple maths. And multiplied by 20, we just need the 20, we just need the tax element, right?
Okay.
So 30,000 divided by 120 into 20. Now let's calculate this. So 30,000 divided by 120 into 20. So this gives us the answer of 5,000. Okay, so output tax, how much we have got? It's 5,000 pounds. Okay, there was no opening balances. Just simply what we have to do is, we have to total them off, just balance the account, like I told you in yesterday's class. So the heavier side is 10,000, right? 10,000 over here as well,
Yeah.
and 10,000 over here. Now what is the different side? This one. So balance carried down will create over here as 5,000, because the balance will be 5,000. And what will this be named? I just wrote over here, this is receivable. Let me prove to you as well. Okay, this is the receivable balance. Now let me prove you how it is a receivable. Now see, 10,000 is the amount that we have to receive from the government. This amount that this amount will be refunded back to us, right? This 10,000 will be given back to us, and 5,000 is the amount that we have to pay out to the government. This is the amount that we'll receive back, and this is the amount that we'll pay to the government, right? So in other words, 10,000 is our income, 5,000 is the expense. So if we
Yeah.
net them off, minus 5,000, what is the answer we get? 5,000, and this amount is receivable, because out of 10,000 receivable, we are paying 5,000, so still we get 5,000 receivable, right? So this is the interpretation for this. This is the meaning for this. How I got this
Okay.
5,000 receivable.
Okay.
All right. So this is how we do the sales tax question. We basic rule over here is that we have to net off the inputs and outputs. Okay, it's not like that we pay first the outputs, then we receive the inputs. It's always netted off. The tax department always nets these two amounts. Okay. And in most questions, we have to make a sales tax account. In the questions that we have got inputs as well and outputs as well. But in some questions, we'll do the exam kit tomorrow. In some questions, there is just one thing. Either it's just purchases, either it's just sales. Okay.
Okay.
So for that, we don't necessarily have to make the sales tax account.
Okay.
Okay, so we have done successfully the three topics. I hope you're clear for these topics. I hope there is no confusion. Any kind of question that you have, you can ask on the WhatsApp. I'm always available. Okay, and the questions, there is no homework for you today. We'll do the exam kit questions in tomorrow's class, both for the double entry as well and for this chapter number 4 as well. chapter 5.
Okay.
All right.
Okay.
Everything clear? Any confusion?
No, nothing. I just need to go through my notes again, and
Yeah,
then
sure.
yeah, be good.
Exactly.
Yeah.
You can revise them as well, and I'll send you these notes as a PDF on WhatsApp as well. Okay.
Okay.
So I think it's enough for today, and we'll continue the class tomorrow at the same time. Okay.
Okay.
All
Okay.
right. Thank you so much. All right. Thank you.
Okay.
Take
See
care.
you
Bye bye.
tomorrow. Bye bye.
Bye bye.